Hello, welcome to this review. Today is Tuesday, 15th of August, or 15th of July. So we are reviewing today's trade. Look at this. So this is the daily time frame. You can see we had buy side liquidity sweep. So this is the Monday, this is the Friday candle, and this is the Monday's candle. The Monday's candle swept the Friday's buy side liquidity and closed within the range of Friday's candle. Now, since that has happened, let me just name this daily buy side liquidity sweep. So we were anticipating that Tuesday would go lower just as it has gone lower like this. So if you know about the open high, low close, you will realize that since this candle has opened and closed below, price will continue pushing lower. Now, going to the lower time frame, let me go to the 4-hour time frames. We see what is happening there. So what is happening here? We can see this Friday's candle, the 10 a.m. candle swept this high, and you can also see this impulsive move lower going down. We had an order block right there. Now you will notice that as price is going lower, as price is coming to this area, it is reacting off this area, giving us a buy side liquidity sweep on the daily time frame. And then also this old high was swept. So price is reacting off this 4-hour breaker order block. These are bearish order block. Okay, so we have this order block, price reacting of it. So now that we know price is likely to go lower in the 4-hour time frame, we can drop to the 1-hour time frame and see what is happening there. Now, this is the daily buy side liquidity sweep. This is the old high liquidity being swept. Now that is no longer relevant to us. We can get rid of it. Now looking at this, the 1-hour time frame, if you scale it up a little bit, you'll notice this liquidity sweep right here. This is the 1H buy side liquidity sweep, right? Now this one is going to, this confirms that we are going to push lower. Price is going to push lower. Since this has happened, now we can look for other confluences. Now prior to this sweep, we had price coming down and going up, sweeping this high, and then a bit of consolidation, then pushing lower. Now as it pushed lower, there was a market structure shift at this point. So this is a 1-hour market structure shift. Okay, so that means our price confirms that it is going to go lower. At this point, we want to mark our next confluence, which is this fair value gap that was formed as price moved lower, right? As price moved lower. Now we sit on our hands and wait for price to retrace into this fair value gap, and then we see what happens from there. So now the price came into this point, this zone. These are tiny retracement into this zone. Now we go to the 5-minute time frame for our trade execution, but we will need a couple of confirmations first. Again, looking at the 5-minute time frame, you can see we had how many of these? The first liquidity sweep, and then looking in the lower time frame, at this point there was no solid market structure shift to validate this liquidity sweep right here, so this becomes invalid. We go to the next one here, right here. You will notice now that gave us another, it gave us another buy side liquidity sweep, which was valid because as price came lower, it shifted the market structure. You can see what happened at this point. Okay, so this is a 5-minute market structure shift. Now this is a 1 hour breaker block, okay, and price is reacting off it. Since this has served its purpose, we can get rid of it and look at what price is doing here. So since we have a valid market structure shift, it means our breaker block, this last down close candle right here, becomes valid. Okay, so that is a 5-minute bearish breaker block. Now see what happened at this point. This is at 8:30, and there was CPI news. This candle here, this week here, is the CPI candle news this week right here. You'll notice it tapped into a 5-minute breaker block and rejected lower. Now after this market structure shift, you head to set your sell limits right there and your stop loss right above that swing high that swept the buy side liquidity, and targeting a clean strict 3R right there. You can see 3R. Okay, so you can see straight to our the CPI news candle wicked into a 5-minute breaker block and then activated our sell order and moved lower. Now this trade moved straight into our TP. Now if you're using market structure to get targets, you would have used this swing low. Get rid of this swing low right here as a target, and then finally this we had several swing lows here, several swing lows right here that delivered clean market structure as it moved up. Right, you could have also used this, which would have given you a lower risk reward ratio. However, the reason I'm marking these levels is because, assuming you missed this first entry, as the price is moving lower, you will see there is some activity going on here, and then an impulsive continuous move lower after the CPI news. So we have this order block right here, and as price retraces in up, it gets into this order block and reacts of it. Okay, the moment it does that, you would have taken another entry right here. Your stops above this swing high. You can see this swing high right here, just before that impulsive move, and then you target now your levels. You can target this level, or get another 3R right there. So that is the review of Tuesday's trade based off the daily candle, CRT, and the lower time frames ICT entry model. Bye bye, see you next time.